So you're expecting real interest rates to drop then. If the yields remain low and inflation remains high, isn't that negative for real interest rates and perhaps positive for gold?
So I view real interest rates as likely being negative for a long period of time. Whether or not they go lower than now, I think is hard to say. But I think my key thesis is that they'll be persistently negative, and that there's obviously a certain risk that they go lower. So one of the things we're seeing in the United States, for example, is that shelter inflation is picking up, and so rent inflation and owner's equivalent rent inflation, they have not been large contributors to that initial inflation spike we had, but they're now driving a lot of it. And so they're about a third of that CPI basket. And so that's part of why it's going to be sticky going into 2022. And then, of course, from there, we have to see what happens with the energy cycle, with some of these other demand sources and supply chains.